Hi there. So welcome to another news bulletin of the Nifty for the first week of May. I'm Sharad, and I, along with my analyst Aman, bring this report on a weekly basis, wherein we are making our own investment decisions, but primarily we share whatever we learned and analyzed for the benefit of everybody else. And any discussion and conversation around this is welcome. We also run a weekly algorithm, or for that matter, on a daily basis to find out stocks which are showing support at significantly higher levels and are fundamentally strong. We share that list too, based upon our analysis. So first, the usual weekly stuff. That's how the Nifty behaved during the week. It was up by 0.25% to close at 22,475. The key point being that it did go up significantly during the week, but then Friday saw a little bit choppy trade and it came down to its usual level of 22,500. And obviously, there is a lot of anxiety that is building up because of elections. And overall, our recommendation to all the people who are there in the market is to stay cautious. And if you want to rejig the portfolio to a certain extent, move them to more conservative and large cap stocks. That's what's being observed overall in the space, that a lot of money which was earlier being pushed into mid cap and small cap is now being pushed into large caps. In terms of the advances and declines, we saw exactly 25 advances and 25 declines. So overall, just a very balanced week. Nifty mid cap up by 0.75%. And if I sold for 2,116 crores, and if we look at the net outflow from FIs of the last 3 to 4 weeks, of that matter, significant part of 2024 has been always on the selling side. So most of the time they've been reducing the position. One is because of the elections, and also the Indian markets are definitely a little bit heated up. So DI is bought for 2,042 crores. If you really look at the net inflow in the market for this week, was fairly low. Now, in terms of the sectors, how they did, financial services up by 2.08%. The silver lining over there being the Bajaj Finance. Bajaj Finance had taken a significant beating when in the last week, their quarterly results, the management clearly indicated that there is a pressure on the net interest margins. But this week there was a good news around lifting up of some of the ban by the RBI around e-commerce lending and the Insta EMI card, which brought back a little bit of euphoria on the last day of the trading session. That's on Friday. The stock went up by 8%, but it did close back on 1% positive or something like that. So, but the markets have received that news with this thumping positivity. Autos up by 1.94%, banks up by 1.5%, and IT saw again a beating week with 2.05. So IT has been genuinely a laggard for the last 1 month or 2 months, primarily because of the uncertainty in the US markets and also the AI space, and how the Indian IT services companies will be able to take those headwinds, because definitely a lot of business that was being done by IT services company is under threat because of the AI. So there is a lot of uncertainty, and because of that uncertainty, this is getting cut. Every week we cover a quote by somebody who's made a mark in the investment business. Today we're bringing in John Mowgli's quote. He was the founder for Vanguard, and he's also a great philanthropist, because every month he, of that matter, every year he would give away half of his income. And he made a lot of fortune, but while he was making the fortune, he had the courage to give away a part of that fortune right then and there rather than later on bring it up. So the quote says, learn every day, but especially from the experiences of others, it's cheaper. So as the quote indicates, we need to learn from the experiences of others, because if you really look at the stock market, if you are always trying to learn by yourself, you will be left with no capital. So that's the key point, and that's one what one should live by. Understand the portfolio, how they've moved up or how people have lost all their fortune. That's the key part of it. Now, results this week. This was again quarterly results week that will continue for the next 2 to 3 weeks, and we're bringing in some of the key ones. The first one being the Titan this week. The revenue is up by 16.3, but the net profit wasn't that strong at 7%, and it did meet analyst expectations to a certain extent, but definitely not an euphoric one. So, as the brand stands for the jewelry, the top performer with 99% of year-on-year growth for jewelry, but that's not the only space in which the markets are expecting it to grow at this point in time. 86 new stores added in Q4, taking the total to 3,035. What was worrying for the market was the fact that the IVS segment did not grow as much as expected, and the competitors like Lenskart is definitely putting it down. Uh, it did miss the estimates of 23% growth for the IVS segment, and that's why there is a short-term dip. Overall, if you really look at from a recommendation perspective, what we are indicating is that from a long-term perspective, it still remains a growth stock. Although the valuations are really stretched for Titan at 94%, 94 PE, uh, we believe it's a hold at this point in time for long-term investors. For short-term investors, definitely don't build any new positions. There's no strong momentum on the stock in either direction at this point in time. So that was Titan. The next one being the Britannia from the FMCG segment, revenue up by 3.1% year on year, and net profit declined by 3.8% because of pressures in the input cost, and that clearly indicates the inflation. And when there is inflation, either the price needs to go to the company or the price needs to go to the consumer. And this is one segment which is so strongly competed in the market that it is always the FMCG at this point in time, the companies that bear the cost, because the elasticity of these product lines is very, very less. And the other part of it that it did have the modern trade and e-commerce channel witnessing double-digit growth, indicating a positive shift in sales strategy. Today, everybody wants to build that channel, and that's a positive sign in this. Overall, the profits declining slightly by 1.5%. So it did miss the estimates to a certain extent, but for a long-term investor, it's still a hold and sell for the short-term investors. MRF revenue up by 8.38% year on year. Net profit declined by 7.6%. Announced a dividend of 194 the entire year. How the profit is up by 170%. So this has been a great year for automobile, and obviously all the automobile ancillary units have an advantage of that, and that's what we saw, 170% year on year increase. The fall in Q4 has been due to the decrease in operating profit margin in this quarter. Like every other business, either the price has to be passed on because of inflation or it has to be borne by the company. At this point in time, due to lack of genuine elasticity in the pricing, most of the companies are absorbing the cost. Finally, it'll go down to the consumer. But again, MRF having the same issue. So the stock did fell by 4% post the Q4 results, but it is a good time for long-term investors to buy the dip. And it's one of the stocks which is genuinely expensive and not a commoditized stock on the market. So if you're a long-term investor, then consider it, in my opinion. So that was the result season for this week. Now, the other part that we cover and as part of this particular weekly bulletin is all the companies which are very, very strong on fundamentals. When we say strong on fundamentals, we have analyzed these companies and then we have created a listing of these companies, which is either they have a very strong profit growth and their PEG ratio is fairly under check, or there is some other reason that the company has made it to the list because of the fundamentals that it demonstrates. And we run a list, a kind of, algorithm to figure out if the stock is taking support at higher levels on week basis. What it means is that if the stock in the week of last week of that's week of 20th April showed support at 200 rupees, then in the subsequent week, that's the previous week, did it show support at 200 plus. So That's one criteria. Then the second criteria that we put into this cost is on a stock is on a weekly basis. Is it taking showing good volumes on day when the stock went up, positive trend on EMA, and as I mentioned, that only the stocks which are fundamentally strong make it to this list, the a list on which it is being proved. So if we go by that list, we did have a very good set of stocks, but we only picked the four that we are going to consider for investment. One is NMDC, which is at trading at price of 269 and PE of 12.25. This has been on our list from quite some time. Sale 167.3 and PE of 22.9. Ashok Leyland, which has had a tremendous uptick in the last 1 week itself, but we're still recommending because its PE is still under control and it's a volatile stock at this point in time of slightly expensive one. But definitely, if you wish to ride the momentum, then this is the stock to pick up at 202 rupees. Cummins India is another one which has had a very strong momentum with absolutely no resistance, trading today at 3,411, but it's very expensive at 61.79. However, its last two quarter results have shown a lot of positivity, and that's why the stock is riding very high on the boom that has been seen by the auto sector, primarily because of the blocked sales from the COVID coming in during this particular cycle, and then this being a supplier in that particular space, and also the diesel engine in general. So these are the four stocks that we are considering. The last two are definitely very, very expensive at this point in time, but still strong fundamentally, as well as in terms of momentum, very strong. So that was a week in of first week of May. Hopefully, the next week continues to have sideways momentum. The build up to the elections is not such that it breaks the market euphoria or pushes it down significantly. I'll see you in the next one. Continue to invest and trade with conviction using the right knowledge. Stay tuned, and if you have any comments, please put them in the comment section. Bye for now.